What's step number one that you must be aware of as a technical analysis trader? What is number one? Okay, for those of you guys are saying number one is activity. You can say activity, purpose, volume. All right. Okay, I see a lot of you guys saying liquidity, activity, good. Number two, you want to do your rubber band man, which is momentum. Okay, I simplified your momentum for you. Just imagine that guy. He's one man out there taking on the markets on his own. Let's put his hands on his hips. Give him some eyeballs and a cape. All right, he's the hero. Okay, we call him Mr. Rubber Band Man. Okay, as long as you can read Mr. Rubber Band Man, you have an idea of momentum without going over the financial technical jargon of like, oh my god, I can't understand this. Okay, 65% pullback, 22% follow through. It's gonna drive you nuts. Just remember this cartoon. Okay, remember this cartoon. He will take you through. All right, and finally, number three, as I see all of you guys, territory and flow. Okay, and again, a lot of you guys in here are actually students, and you guys will definitely know why this is extremely important. Territory and flow, you just cannot skip. It is not something to be overlooked. Now, shall we put this all together? Okay, let's start with element number one. If you're a trader and you do technical analysis, the one very important thing that you have to know is technical analysis will not work if there's no momentum. Let me repeat that. Technical analysis will not work if there's no momentum. The market must be alive and moving for any of you guys to do any kind of technical analysis. Support and resistance, supply and demand, Fibonacci, pivot points, you name it. Anything that requires any kind of technical reading skills, you need an active market. So if you want to try doing technical analysis at the close of New York, try that. It won't work. It won't work, right? So you need an active, volatile market. So our job as traders is to start by looking for volatility, right? So we want to know where we can apply our technical analysis, right? So step number one is always to be on top of those things, right? Okay, which means find out if there is activity. Find out if there's activity today. Find out if there is activity pending from yesterday. Okay? And if I can spell it right. There we go. Find out if there is activity from yesterday. Now, step two, you want to do the momentum to find out, is that activity alive or dying? I'm going to give you a little shortcut, okay? For a lot of our students in our courses, one of the courses called Mastering Price Action course, there is this guy we called Rubber Band Man, okay? He is like the hero at Urban Forex, okay? And he has one big eye, apparently. Okay, anyways, this guy, we call him the Rubber Band Man because I want you to imagine as if there is a rubber band around his waist pulling him back, okay? The rubber band's pulling him back and he wants to run forward. So something keeps pulling him back. So when the markets are ranging and then the Rubber Band Man begins, bam, he's running. He runs from here to here. Once he's running, he can run as much as he can with all of his energy, and then he has to take a break. He has to rest. And that rest comes in. That rest comes in. And then he begins his running again. And now what he's trying to do is, can I beat my previous record? That's what we are all looking at. Can he beat his previous record? Okay, those are eyeballs. You sick bastards. Don't get any ideas. Those are eyeballs. And we're just watching, can he beat his previous record, right? Once he's able to beat his previous record, we continue watching to the next area and we're judging it now. We're like, okay. Okay? So we're watching it, we're like, okay, the first time he ran from here to here. Okay, if I can extract that out, if I can. Can I? Okay. That's the size of the first time. Then he rested. And then after his rest, he ran again. Let's extract that out. And we're like, interesting. His next run was smaller than his first run. Okay, this tells us something about the momentum. It's slowing down. It doesn't mean he's dying. It's slowing down. Rubber band man, it is coming into some problem. Let me put this back here. Let's continue. So it's a busy market. London's open. Everything's moving. Asia's done its thing. London's done its thing. Now New York is starting to get in, and they're looking at this as, okay, I want to sell too, but I don't want to sell down here. I know the sell started all the way up here long time ago, but I want to get in on this action because it's active, it's up and running, and I need to do my technical analysis. Prices go up to support and resistance. Support and resistance doesn't hold. He goes deeper. Gets up to supply and demand guys area. They're like, okay, well, this guy's going to hold it. Okay? It's doing all sorts of things to get you into a mode where, oh, okay, there we go. To get you in a mode where saying you need to prepare for your sells, but the sells, what you're looking at, you're understanding that the rubber band man very tired. He was slowing down as is on the way down, but now even his rests, when he's taking a break, his breaks are deeper and deeper and deeper. Now, around this area, you need to be on high alert. Why high alert? Because as when prices come down and they cannot make a lower low, which means he cannot even beat his previous record, there is a high opportunity where the initial wave can start and go up. Okay? Now, remember when I told you guys earlier that how many people hit the sells from the top? Very few. And then a little bit more, and then a lot of people saying, I want this, I want this, I want this, because I saw somebody else do it, so I want it too. Until then, no one is doing the homework or the research or the analysis to be one step ahead of the game. Okay? This is what we like to call, in urban forex, we say, you have to anticipate and not participate. So as this whole thing is happening, prices are coming down, the pros are getting ready to do their buys, the buys are going higher, and that rubber band man who was running from here couldn't make a lower low and beat his own record. He rested, and he rested through his own previous record. That means he's out. He's out. Now the buyers are here. Now that the buyers are here, the first thing that happens is all the people who were selling are like, okay, it's going to go for a sell here. No? Okay, it's going to go for a sell here. Come on, support and resistance. It's going to go for a sell here. Supply and demand. Come on, it's going to go for a sell here. Fibonacci retracement 1.28. Okay, it's going to go for a sell here. All of the stop losses start from here. Stop, 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 stop. The market goes up, pulls back. Pro traders add in size, and here they go. Second wave comes in. Now the people who were looking at this as a sell, they're like, oh, you know what? It's no longer a sell anymore. I got hit too much on the way down. It's actually a buy. But you know what? I'm a pro. I'm not going to buy it up here. I'm going to wait for my support and resistance and my supply and demands and my Fibonacci's to come down so I can then buy it from there. You see how the illusion of the trade entries are happening so much later in the game that it's causing no place to survive. Okay, how many of you guys here can actually say, yes, I've seen that happen. It's happened to me. It used to happen to me years on end. And I was just sitting there, I'm like, why does my support and resistance work so well sometimes, and then at certain time it doesn't work at all? Unfortunately, this happens all the time in the markets. Now, up until this point, everyone with me so far, understanding momentum, how momentum can shift through the illusion without letting anyone know, and once it's clear and everybody knows it, it's dangerous. Here's the next stage. So that was now going into step number 3, which is the flow and territories. So let's say the markets are moving in an uptrend. Markets are moving in an uptrend. Prices start to hold. They start to hold and they start pulling back, pulling back, pulling back. Reaches an area of a strong support and resistance, let's say. Okay? Reaches an area of strong support and resistance. Pulls back, pulls back, pulls back, goes up, goes up, goes up, and then it does this. Bam! Are you a buyer or are you a seller? Okay? Are you a buyer or are you a seller? This is something very important to know. Okay? Now I'm going to share with you guys some of the secrets that I share in the Mastering Price Action course, and I know a lot of these students will tell you this, how important this piece of the lesson is. It is so basic but so important and overlooked by millions of people. Millions of people. So you see this market going up. It started here, went up this high, pulls back, started here, went up even higher. And since then, no higher high, no higher high, no higher high, no higher high, no higher high. But we never went lower than this either. All of this activity here belongs to him. To make it simplistic, just think of it that way. All that activity belongs to this guy. Okay? Think of him as a very, very strong guy who's holding the market. Unfortunately, he does not want to buy yet. He's waiting for a price that is a bit better. Okay? So as this thing comes lower, many people will think, oh, my support failed, and I can see all these little support and resistance failing as well. This is a seller's market. This guy will come back and say, that's exactly what I wanted. I wanted to do these buys. Thank you very much. And the buys will activate and they will jump straight up, bounce, possibly making a new high after that. This illusion is the number one illusion in the market. Some of you guys can refer to this as complex pullbacks. Some of you guys can refer to this as set one, set two. However you may look at it, this is not taught so easily out there in the public. Okay? Everything is taught up until this point. You buy off of support and resistance right here. Okay? And if it doesn't work and it drops down, then you sell because support didn't hold. So then you keep selling it. When in reality is you don't sell that. That is very, 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 very dangerous. Okay? I don't know if I said very enough times. Okay? So let's say the markets were ranging for the last couple of days. Ranging, okay, makes a little bit lower, comes back up, goes a little bit higher, comes back down, nothing, 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 and finally today the markets, let me move this down, the markets rise. Okay, it goes boom. There's some activity, the market goes up, news came out in Asia or news came out in Japan. In the past, some news came out and it started the movement, breaking some important levels, getting up higher and stuff. Now you know the flow is back on. Why is it back on? Because of this word. It's new. Not many people can take activity when things are new. They can only activate once it's too much, once it's really, really out there. Once that it's new, we're like, okay, great, it's going up. We know the territory is now, he's the guy, he's running up, and anything, as long as, once he starts pulling back, as long as we don't make a higher high, and we don't go below this guy, everything that pulls back belongs to him. Everything that pulls back belongs to him, which means it belongs to the buyer. Okay? He is in control of the market, to the buyer. So if you start getting this, here's a quiz for you guys. Okay? Watch this very carefully. Where's my, okay, let's get rid of this and that. So if you see this coming, the market's coming down, pull back, coming down, pull back, coming down, pull back, coming down, he reaches this area of support and resistance. He reaches 61.8%. He reaches the Fibonacci level as well. And now he's starting to go up. He does all kinds of things that tells you, well, if he goes above this, I'll buy it. If he turns around and he goes above, if he gives me a bat pattern, if he gives me a monkey pattern or a squirrel pattern, I'm going to buy it. And all the buying start, but they fade. They fade. They fade. And then it starts coming down lower and starts crashing on you. Now, what happens is anyone who's involved in the buys, what do you think they're thinking? Their stop loss is below the recent low. Okay. Their entries was based on support and resistance, which is the generic way of doing everything, right? So as prices are coming down aggressively, they're now into panic. They're into panic. They're looking at this like, oh my goodness, maybe, okay, maybe if it stops here, I'll actually buy more. I'll buy more. And the greed kicks in. And then he goes down, he jumps up a little bit, comes down a little bit. Everyone's like, oh, that's it. I told you it's going to be a buy. They buy more and they buy more. And during this process, it crashes down further. And then in this whole process, while a short-term trader might be looking at this as, can you not see this as a lower high, lower low sequence? A lower high, lower low in any textbook in the planet means downtrend. Unfortunately, this downtrend belongs to this guy who's still alive. We haven't made a higher high since. We haven't gone below him since. He is in control of this entire market. Once this thing stops out all these people, orders pile up, and as orders pile up, this thing prepares and the real buys activate later after the rubber band man. Okay, so this is where your rubber band man comes in handy. So you're understanding the flow of the market. Okay, let me get rid of this face. This face is creepy. All right. Okay, so you're now looking at your pullback as a rubber band man as well. You're seeing rubber band man. He runs from here to here, and you're like, he's very strong. He just started. He's resting just 10%. He's resting a little bit. You're like, oh, the guy's got power. He's on steroids. Then he runs again, almost 100% identical to his previous run. We're like, wow, that guy's pretty strong. But this time he rests a little bit deeper. Okay? And we're like, okay, interesting. Now the places where I told you these guys are looking to do adding more positions to buy. They're thinking it's coming back. Yes, we can hold this for a buy. Or if they get stopped out and it comes back, oh, it was just a probe, or it's a faker. It stopped me out. Let me do the buy. As they do those buys, but our rubber band man to the downside is not done yet. He's still going. He rests quite deep. Now this puts us in an alarm. Why is he resting so much? He runs again. Barely makes a lower low. Okay. Comes right back. And we're like, oh, could he be dying? And now, since he ran his previous record when he started running was here, and now we're going above him, it's like it's over. That little short-term selling that took place is out. This is when this big guy who's brand new, he's like, it's party time. Let's go. And how much are we going to go with this? We scale hard. Go big, large position sizes, and this thing starts to now rise. And the goal of this thing is to make new highs. Goal is to make new highs. Is that starting to make sense? Okay, so promise me starting today, 1, you are not going to trade if there is no activity. Okay, promise me that. Okay, as technical analysis traders, you cannot trade without activity. 2, okay, number 2, you will read your rubber band man as if he's your best friend. Okay, as if he's your best friend, because he will help you. Judging your best friend will help you. It will help you. Okay? And finally, step number 3, know who's in control of the market. Know who's in control of the market.